Good morning.
You say cyclical rally in a secular bear market. Can you just put that into plain English for us? We know
I think that's the idea on Western markets. Yeah, so I don't think that it necessarily applies to everyone.
This is your read of the moment.
Yeah, of America and of Europe. And so, you know, we had a peak in 1998, 2000, depending how you measure it. And since then, the tide's been going out. And essentially, the PE was very high. The PE is now sort of neutral. And presumably, this ends when it's very low.
And you think emerging markets are expensive, and you are not in them.
Yeah. I think emerging markets have been a very strong theme these past 10 years, right up until the end of 2007. And I think people look at the credit crisis as exactly that, a Western credit crisis and a failure in the banking system. And they don't see it as a bubble in emerging markets. You know, the Chinese stock market was up 10 times in the preceding years and crashed a very great deal and really is struggling to recover. I think we're in the aftermath of an emerging market bubble in many areas. Now, that's a broad
I was going to
statement.
say, this is a very broad statement about the individual companies. I mean, a lot of people talk about countries such as Indonesia, for instance, that has got a very young population and different consumer-led internal growth.
Indeed. The sweet spot at the moment, Thailand, Indonesia, Philippines, is working well. And I'd also say that actually the Middle East is a very interesting place that isn't working yet, or Saudi Arabia is starting to work. But if you like the idea of oil, then why not put some money there in cheap markets that have been out of favor now for 6 years.
Sell emerging markets, buy Japan.
Yeah.
And between Europe and the U.S., you want to hold nothing in Europe. You like the U.S. better, is that right?
Absolutely. Well, we have, you know, our portfolios are conviction-led, so we choose our favourite themes and we go with them. Now, I'm not suggesting everyone sells every share in Europe.
Yeah.
But if you're conviction-led, which I think is quite curious, more than a third of your asset allocation is in cash still, which must surely say we are pretty nervous about it.
That's not quite right. That was true in December. That's no longer the case. Our cash level is now quite low.
Can we ask you what level it is then?
Yeah, well, we'll put it this way. Our equity is fully loaded. Well, our peak on equity is 40%. We are at 40%.
Right.
And we also have some precious metals as well. And we're fully invested in hedge funds, and our bond book is overweight. So is underweight. So any cash that we do have is a result of not owning bonds.
So you've plowed it into these new areas. Now, gold, you say this is one of the biggest investment themes around. Presumably that's because of all the cheap money being printed by central banks around the world. Do you think that gold has still got...
If you traded against assets and inflation, then I think it's probably got less to go for. But now we were comfortable with the idea. 3 years ago we talked about 2,600 per ounce. Now I think we can increase that target from here.
Some room to move higher.
Yeah, I think the fundamental driver is real interest rates, and always will be. And quite at this time in the US, for example, they're about -3, you know, depending how you measure them. And you know, our research suggests that anything below +2 is a positive environment for gold. So we're in a very positive environment.
How positive? How much more? It's 1,700 an ounce now. What's it going to be at the end of the year?
Well, I think that if you believe that gold is money, then the number from here is many times the current price. If you traded against assets and inflation, then I think it's probably got less to go for. But now we were comfortable with the idea. 3 years ago we talked about 2,600 per ounce. Now I think we can increase that target from here. But I think essentially it's the theme of gold, which is basically up 6-fold over the last 10 years, which is way ahead of any asset class. And it's still not in a bubble. It's still not heavily owned, and it's still not making good money when things go wrong.